We saw one of the biggest corrections after COVID in small and mid-cap stocks recently, basically a crash worth 14 lakh crores. Now, why did the markets correct? What is the mutual fund stress test? And most importantly, what should investors do and which stocks can you buy now? I'll quickly tell the reasons behind the fall. First is that SEBI's chairman, Madhvi Puri, basically said that there is froth in some small and mid-cap stocks. And so there's a huge bubble which can burst anytime soon. Now, a statement like this coming from such a huge regulator was obviously unexpected and a scary thing for most retail investors, which led to a lot of panic selling. Second, RBI also got involved as it took certain actions like asking IFL Finance to hold gold loans, then asking JM Financials, telling them to suspend loans against shares and IPO financing. All of this was basically done to reduce the overall liquidity in the stock market. Third, SEBI told mutual funds to be cautious and basically restrict inflows in their small and mid-cap funds. Now, many fund houses like ICICI Prudential have now stopped accepting lump sum money in their small and mid-cap schemes. Lastly, SEBI is also conducting stress tests for mutual funds. Now, what does that mean? Stress test basically tells us how quickly investors can get their money back in case of market volatility. For example, if too many people take their money out of the funds. In 2023, mid-cap and small-cap mutual funds saw inflows worth almost 70,000 crore. This means that retail investors have participated heavily in them. SIP inflows have seen new all-time highs almost every month this financial year. Now the concern is, because of such high inflows into the small and mid-cap segment, if the market sentiment becomes poor or investors start to panic, they'll start to redeem their holdings, matlab take money out of the funds in masses, which could put a pressure on the fund managers to sell stocks quickly just so there can be further sell-offs. Now SEBI is conducting these stress tests to basically check how well mutual funds can handle such a surge in these redemptions. Isse they can ensure that mutual fund houses have enough liquidity to meet investors' demand without creating a huge sell-off or selling pressure in the market. This is great for investors because more disclosure means more transparency, so we will know the quality of the funds we're holding. Now the most important part is, what should you do next and where should we invest now? First of all, if you're holding fundamentally strong stocks, there is no need to worry. If they've corrected, then they will definitely go back up also. But the truth is, if you saw a very huge drop in your portfolio because of this recent correction, that just means that you have not been investing properly. Now, one of the most important things to do in investing is building a well-diversified portfolio distributed properly between small, mid and large cap stocks according to your risk capacity. In 2023, mid-cap mutual fund schemes got inflows of almost 23,000 crore and small cap schemes got 41,000 crore. On the other hand, large caps saw an outflow of almost 3,000 crores, which means large caps have clearly not been in demand by investors. Now see, after the correction, there definitely are many small and mid-cap stocks that even I have picked at better valuations. But if there is one segment which is available at good, if not great valuations even now, that is the large cap segment. Many experts, including Ronak Omkar at Parag Parekh Flexi Cap Mutual Fund, recently said that they've added a lot of large cap stocks like Power Grid, EID Parry, Kotak Mahindra Bank, HDFC, ICICI, etc. Even the founder of Quant Mutual Fund, who is popular for taking high risk for higher returns, recently said that 30% of their entire portfolio is now in large cap stocks, and HDFC Bank is their favorite one. So we can clearly see a sector rotation happening towards large caps and larger mid cap stocks. So the main question is, which stocks should we buy now? So here's the list of stocks that mutual funds have bought the most recently in large cap, mid cap and small cap segments. First is HDFC Bank, which definitely looks good considering the risk to reward ratio. Then HDFC Life, Power Grid, JSW Energy, Adani Enterprises, Britannia, Wipro, Kotak Mahindra Bank, Union Bank and Cummins India. This is in the large cap segment. Then there is Oil India, Indus Tower, Devyani International, Godrej Properties and Aditya Birla Capital in the mid cap segment. Then Kalyan Jewelers, Whirlpool India, जो almost हर mutual fund house ने खरीदा है मुझे लगता है. फिर Swan Energy, Data Patterns, Mahanagar Gas and Latent View Analytics in the small cap segment. The stocks that I have been holding from all of these are here. You should definitely do further research to pick the right stocks for your portfolio according to your risk tolerance, and remember that good investors welcome corrections, because first it filters out all the unserious investors and new traders out of the market, and second it gives us opportunities to buy great stocks at better valuations. I hope this helps. Let me know in the comments if you want a new YouTube video on top mutual funds to buy from all different categories.